Rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
Concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
when concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process we call it biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in the case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Friday Eve, Thursday, April 29th, 2021. Carol Masser along with Tim Stenovic in our Interactive Broker studio, also streaming on YouTube, kind of bouncing around on Wall Street right now.
Yeah, investors trying to make sense of earnings. It's interesting seeing stories like Apple, right?
Yeah.
Pops after market yesterday, but then a little bit of a pullback today.
Yeah, it was a gainer. It was on my kind of list of gainers, and then all of a sudden I'm like, oops, got to take that off because now it's a decliner. We're going to have some big earnings after the close. Amazon and Twitter. We've also got some economic data to go over too, which was also actually supportive of that economic recovery. So we'll get to that in just a moment.
We will. Let's now go to Charlie Pellet for a check of the trading day and business headlines. Hey, Charlie.
Hi, thank you very much. And here's what's going on. Good afternoon to you both. We have got the Dow, the S&P both higher. S&P at a record. NASDAQ on the minus side. After the bell, it's Amazon up by 0.3%. Also hearing from Twitter, down now by 1.8%. Right now, we've got the S&P up 15, a gain of 0.4% to 41.97. The Dow up 111, up 0.3%. NASDAQ on the minus side, down 7, a drop there of 0.1%. After earnings, Apple shares, they are trading a little changed. Right now, we do have shares of Apple. They are moving higher, little changed, as I mentioned, swinging between gains and losses, up now by just about 19 cents on Apple. 10-year yield, 1.64%. Gold down $13 the ounce at $17.68. West Texas Intermediate crude oil up 0.3% right now. WTI is up, actually up by 1.6%. WTI 64.86 a barrel. Brent is at 68.37. Barrel of Brent up by 1.6%. So again, recapping equities mixed. S&P at a record up 14, up 0.4. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Setting the scene for us, as he always does. Charlie Pellet, thank you so much. Let's get to the Market Drivers Report. And let's set that Business Week agenda on this Thursday. Dave Wilson, stocks editor at Bloomberg News on the remote access in New Jersey. Michael McKee, international economics and policy correspondent at Bloomberg News. He's in our New York City bureau. Dave Wilson, just quickly kind of add on to what we just got from Charlie. He was breaking, of course, down those major equity averages. What stands out for you? Because it's really been all over the place today.
Jumps out, communication services, the best performer among the 11 main industry groups in the S&P 500, and a lot of that is Facebook, whose numbers went over really well. Shares are up 7.6% at the moment. It's not like Apple where they kind of bounced around and then ended up, basically little change. So, you put that all together, and beyond that, it is definitely an earnings-driven kind of market, and not a whole lot more direction than we've seen earlier in the week, though, at the very least, shares have been fairly consistently higher today. That's a real difference.
Well, we did get some fresh economic data this morning. Data released this morning showing that U.S. GDP expanded at a 6.4% annualized rate in the first quarter. Applications for U.S. state unemployment insurance fell last week to a fresh pandemic low. Michael McKee, how did investors respond to this data? What was a miss? What was expected? Take us through it.
Well, as you heard from Dave, it's kind of less about the economics today than it is about the earnings, because mostly it came in as expected. The GDP numbers were a little bit light in terms of expectations, but they're so high that Wall Street was satisfied anyway. 6.4%, as you mentioned. Personal consumption up 10.7%. In the fourth quarter was 2.3%. There's your stimmies for you.
Yeah, I was wondering that. That's all about the stimmies, right?
Yeah, it's all about the stimmies, although business investment
Do people
went up
really call it
9.9%.
stimmies? Is that what they're calling it?
I saw you, Michael McKee, on Bloomberg TV this morning calling it a stimmy, and I just started laughing.
If Mike McKee calls it a stimmy,
I got to be hip. I got to be with it.
You're getting woke on us or whatever.
Yeah, exactly.
Sorry.
No, it's just you got to wake me up.
All right, so the stimulus payments, big deal.
The stimulus payments were good, but business investment was good. The drag on the GDP number this time was in inventories. They were down 90 billion, which is good news for the second quarter, because if business is as strong as it is with everybody buying all this stuff, obviously we won't have the stimulus checks this quarter, but they do have a lot of money saved. So if they're buying all that stuff, then factories are going to have to crank it up. And so we'll see maybe even stronger growth in the second quarter.
Dave, come on in here and talk a little bit about earnings, because as you said, as Michael said, it's what investors are looking for right now. We're seeing some interesting moves. I talked to Carol about this at the top of the show. A company like Apple, right? Blockbuster quarter. But again, it's kind of the similar story with what we saw with Tesla, right? A great quarter, good numbers almost all around, and investors are shrugging it off.
Yeah, I mean, bear in mind, though, with Apple, they have kind of the same Achilles heel as the automakers do. I mean, they talk
Chips.
about... Yeah, absolutely. I mean, they talked about, what, $3 billion to $4 billion in lost revenue this quarter because they can't get enough chips to make the iPads and the Mac computers that otherwise they'd be selling. You know, you put that on top of what we're seeing with Ford Motor, shares down 8.4% at the moment. I mean, they're talking about a $2.5 billion hit to earnings this year because they can't get enough chips for the cars and trucks they want to make. So, you know, when you look at Apple, it's kind of an on the one hand, on the other hand story. And so what you end up with, you know, is a stock that you look at it right now, you figure it isn't moving all that much. Well, it has moved. It's just a matter of what people are focusing on at any given moment.
Well, Mike, you talk about inventory levels, right? Down this past quarter, should be good for the second quarter when it comes to GDP. But I do wonder how quickly everybody can ramp up those factories. Are they ready? Do they have the workforce? The Chipotle CEO, I think some other CEOs talking to us. We just talked about the restaurant industry with John Taffer, and he said, listen, workers kind of don't want to come back to restaurants because they're still getting unemployment benefits and other things, and they're willing to kind of stay home for a little bit. So I do wonder how quickly can companies, factories ramp up if they can't get their labor force back?
Well, we have to see how people feel about the danger of getting sick again, if they've gotten past the idea of the virus once you're vaccinated and are willing to go back to work. But factories will be a different situation than restaurants. Restaurants is low-paid work, and so it's easy for many of those people to get more out of the unemployment checks than they might get at work. And it's also much more perhaps dangerous in the sense that it's very, very customer facing. I mean, you're dealing very close. So there's a lot of reluctance on the restaurant side that you probably don't see on the higher paid factory side. The question is, are there enough workers that are trained and can be hired to step in and do this? And that's going to be an interesting question over the next couple of months.
Hey, just quickly, Mike, 30 seconds here. Jay Powell saves the best for last. Michael McKee getting the last question in. What's our takeaway here? What was your takeaway? Was there something missing? Just give us 30 seconds here.
He and Joe Biden, we can boil both of their presentations down yesterday to one word: jobs.
Oh, okay.
They're going to measure what's going on by the employment numbers, and they don't think we're going to get inflation out of all the stimulus. So let's keep looking on Jobs Day.
I was so afraid you were going to say transitory.
I'm glad you said jobs.
It was a drinking game, and Tom Keene got so hammered yesterday on the Fed special.
Oh, my God. Good stuff. Michael McKee, thank you so much. International economics and policy correspondent, Bloomberg News, on the phone in our New York City bureau. Check him out on Twitter at McConomy. And Dave Wilson, our stocks editor at Bloomberg News. He's going to be back a little bit later on with his chart of the day.
Let's do the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot. Brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
So today's number, 30,000. CBD Oracle is providing someone with an opportunity to work with weed. The cannabis company looking for part-time employee to review pot-related products, a gig that pays $30,000 a year. Plus, you can work from home. You can review at your leisure, whichever way you want to say it. There are free products to sample. That's what we call quote-unquote perks. Qualified candidates can apply at the company's website.
Perks. You know, this happened a couple of years ago when weed was legalized at the state level in Colorado. I had lived there for a few years before that. It was legalized by voters back in 2012.
We're going to find out about a past job from you, Allison?
No, but it was such a big deal because one of the newspapers there at the time was hiring a weed reviewer, the same way that someone would review restaurants.
Yeah, or wines, fine wines.
Yeah, exactly. And now it's like commonplace, right?
A little hint of this. Yeah. Good stuff. That is your Bloomberg Business Week Bite of the Day. Hey, listen, we're going to talk about virus cases on the rise in the Pacific Northwest. We'll do that with Dr. Josh Sharfstein over at Johns Hopkins. We've got a great Washington insider, Chris Liu, back with us to talk about the president's speech.
Then those earnings after the bell, Amazon and Twitter, First Solar, Gilead, all reporting a little later. Let's go down to Washington, D.C. and get the latest on world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. After his first address to Congress, President Biden is on the road. He's in Georgia this afternoon, meeting with former President Jimmy Carter. Later, he's attending a car rally near Atlanta. Greg Valliere with AGF Investments tells Bloomberg the president's trillions of dollars in job and family spending, mixed with tax hikes for the wealthy, will sell well with middle America.
Many of his proposals were almost exclusively aimed at the middle class, and it's backed up by polls. The polls show that most Americans feel that big corporations do not pay enough in taxes. Many of them pay no taxes.
Greg Valliere says many of the president's proposals, though, are aspirational. He might get smaller tax increases than he's called for. As more and more Americans become vaccinated against the coronavirus, the next big question is, will we need a booster? Moderna's CEO Stefan Bancel tells Bloomberg they are testing 3 options for boosting.
We're testing the current vaccine as a boost because we think it will help your immune system by boosting all your antibodies. But also we're testing one that is specific for the strain first identified in South Africa, 351, and also a mix, a 50-50 mix of a existing vaccine and the new South Africa vaccine into a single dose.
Bancel says the company is also boosting supplies of the vaccine itself, promising 3 billion doses next year. The FDA is confirming it is banning menthol-flavored cigarettes within the next year. It's in response to a lawsuit over their disproportionate effect on the health of Black Americans. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Tim Stenovic in our Interactive Brokers studio. A couple of COVID-19 and vaccine stories that caught our attention. One we've been talking about all day. Mayor de Blasio of New York City saying that the city is moving to fully reopen July 1st with arenas, gyms, stores, restaurants, and hair salons returning. Going back to full strength is what he said.
Here's what he says. This is going to be the summer of New York City. We're all going to get to enjoy this city again, and people are going to flock here from all over the country to be part of this amazing moment. You know, he made the case on national TV earlier today, and I think he does that for a couple of reasons. It is the biggest city in the country, but you know, a lot of local politicians wouldn't necessarily try to make their case nationally. But New York City has been hit really hard by a lack of tourists, and with Broadway starting to reopen, and with other parts of the city starting to reopen, I think it's clear he wants to send a message that New York City is going to be open and ready for people to come back and spend their money.
Well, listen, it's a city right across the country where people think about visiting. You know, domestically, it's big on domestic tourism. It's certainly big on international tourism, but I do think it's a big sign. And listen, it's one of the cities that was the hardest hit. Having said that, and we're going to talk about this in just a moment, we are seeing the Pacific Northwest states of Oregon and Washington getting ready to impose new restrictions against, again, this is as they're seeing hospitalizations and infections rise to alarming levels. This is coming from the Associated Press. That is kind of worrisome because I think of the first cases that we saw in the United States, it was on the West Coast, out in that area. So it makes me a little bit worried.
One thing that keeps me optimistic is looking to areas like Israel and the UK that are several weeks ahead of the United States when it comes to vaccinations. And the numbers there over the last few days have just been so good. The number of deaths have been cut significantly in both of those countries, and the number of new cases as well.
Yeah, and let's just hope we're not reopening too quickly.
Yeah.
Right, because we know how quickly a few cases can turn into a lot of cases until it's, we're at a stress point. All right, we're going to talk about this with Dr. Josh Sharfstein over at Johns Hopkins. We'll get to him in just a moment. You're listening to Bloomberg Business Week. Carol Massar, Tim Stenovic. We're just getting started on this Thursday. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
I'm Charlie Pellet. NASDAQ back on the plus side now, showing a gain of 11 points, up 0.1%. We've got the S&P at a record, up 18, up by 0.5%. The Dow up 157, also up by about 0.5%. Choppy trading. Investors are digesting the latest batch of corporate earnings, along with data that showed the U.S. economy gained steam in the first 3 months of the year. McDonald's is reporting its first quarter of global sales growth in more than a year, lifted by brisk demand in the U.S., even as Europe continues to lag. McDonald's shares today, they are trading higher, little changed, up by just about 1% on McDonald's. We've got the 10-year yield, 1.64%. Gold now down $12 the ounce, down 0.7%. $17.69 West Texas Intermediate crude, up 1.6%. $64.92 a barrel on West Texas Intermediate crude. After the bell, we will be hearing from Amazon. Shares higher now by about 0.3%. Also reporting today, Twitter down 1.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, really appreciate that. So listen, we just talked about New York City moving to fully reopen July 1st. We talked about the Pacific Northwest states of Oregon and Washington. They're seeing new infections and hospitalizations rising. This is according to the Associated Press. China and Israel, Tim, too, have identified cases of the so-called Indian variant of the virus among people returning to that country.
Well, lots to talk about. Let's get into it with Dr. Joshua Sharfstein, Vice Dean for Public Health, Practice, and Community Engagement at the Johns Hopkins Bloomberg School of Public Health. He joins us on the phone from Baltimore. The Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Dr. Sharfstein, thanks so much for joining us. I want to start right in with the New York City news we heard today from Mayor Bill de Blasio. July 1st, full opening. Is that a realistic day, or is it too much too soon?
Well, it depends what you mean by full opening. Obviously, things are looking better, and that means that we can do more safely. But I'm sure he doesn't mean going all the way back to 2019 and pretending like the pandemic didn't happen. I think it's going to be important, particularly for people who are not vaccinated, to be careful, to wear masks when they're close to other people, and I think there's still going to be some prudent precautions necessary.
What's your guidance to all of us who may have been already vaccinated? And so as we go about our world, I know I still feel comfortable wearing a mask just about everywhere, out in public and certainly at our office. What's your guidance to everyone?
Well, I think we're starting to see certainly the recommendations for outside change. People who are vaccinated can feel pretty comfortable outside unless they're, completely crowded together with a lot of people breathing on them in like a crowd. But and then, indoors, I think people will start to get more confident, particularly where they know that other people are vaccinated around them. And I think that the real difference will be when the rates of transmission and the cases in the community go way down. Because, even if you're vaccinated, you can still get sick. And we've seen cases like that in a very small number of people, but that, it's possible to get quite sick. So I think that people will feel more confident when they're...
How sick can you still get if you're vaccinated?
Well, particularly for older adults, they can get hospitalized, and there have been cases of death. So it's not impossible. It's not like you're, Superman or Superwoman if you get vaccinated, that you're completely, impervious. But it brings the risk down to a very manageable level. It's similar to other types of infections that can cause a serious illness. And so I think you just, have to be reasonably careful. And I think the most important thing, though, is everyone's risk is less when there's less coronavirus being transmitted. So if we all work together, keep that number going down, we'll all feel more and more confident taking off the mask.
Carol mentioned the surges that we are seeing in some parts of the country right now. Why is that happening? Why is that still happening at this point? And look, I think we need to ask this in the context of understanding that the United States is in a very good place compared to the rest of the world when it comes to administering vaccinations. We keep getting just devastating numbers from other parts of the world, particularly India, which we'll talk about just a little bit later. But here in the U.S., we are hundreds of millions of shots have been administered. So why are we still seeing these pockets of infections?
Well, because there's still a lot of people who haven't been vaccinated. I mean, that's a simple answer to that question. The chance of getting sick if you're vaccinated is just so much lower. I think there was just a study with a 94% prevention, which is just a tremendous response to the vaccine. But if you look out in some of these states, just like Michigan recently, it's a race between the virus and the vaccine. And the virus is getting, a little boost from the variants, which are more transmissible and more lethal. And the vaccine is, moving ahead, but starting to slow down a little in some places because, the people who are really excited to get vaccinated are all getting vaccinated, and now it's getting a little bit harder to find and reach people who still need to be vaccinated. So I think if you think about it as a race between the virus and the vaccine, and the virus is just getting faster, the vaccinations really have to keep up.
Well, that's what I feel like I still don't quite understand in terms of, is it we've got to get to herd immunity so that the variants can't take us to another wave? Because I know we talked about the so-called Indian variant of the virus. China and Israel have identified cases, and that new variant is thought to be fueling India's deadlier new wave of cases that has made it the world's second worst hit country. Help me understand kind of the mix between getting the vaccine, getting ahead of the variants. And just got about a minute, and then we'll come back and talk some more.
Sure. Well, India, it's multiple variants, not just the one they're calling the India variant. There are multiple that are causing the problem. And basically, there are not a lot of people vaccinated in India. That's the challenge. The vaccines actually do protect pretty well. To the extent they've been tested against variants, they do a pretty good job. So getting vaccinated is the best defense against the variant.
We got to get to that place, though, where people who are hesitant, the ones who weren't, the ones waiting in line, the ones who weren't, the ones who wanted to jump in line to actually get vaccinated.
There's a lot of people, though, I know. Yeah, go ahead, please.
You really have to, listen to people, answer their questions, and make the vaccines accessible to them in places that they're comfortable. And we're seeing, you do the first bunch through football stadiums, and then you do a whole other bunch through pharmacies, and then you've really got to go door to door to find people and offer them vaccine. And that's exactly what we're doing here in Baltimore, actually. The health department has developed an outreach campaign.
Hang on a sec. We'll hear more about that because we've just got to do a little bit of news, but we'll come back with Dr. Josh Sharfstein, Vice Dean for Public Health Practice and Community Engagement at Johns Hopkins Bloomberg School of Public Health. You're listening to Bloomberg Business Week. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So one of the things we want to find out, certainly what the folks are doing in Baltimore, Dr. Josh Sharfstein over at the Johns Hopkins Bloomberg School of Public Health, talking about kind of going door to door. But one of the things that you and I talk about, and we all talk about when we get the vaccine, it's like, how'd you do?
Right.
Everybody does differently.
Why do we feel different? Why did it not really hit me, but it hit my wife really hard? Is it because she got Moderna, I got Pfizer? Who knows?
Exactly. So curious about kind of the science maybe behind that. So we'll get back to him in just a sec. Right now, though, a lot going on this market day, kind of up, down, all over the place. Charlie Pellet.
Indeed. Nice way to sum it up. Carol Master, we've got the Dow, though, very close to the best level of the day. We begin there, up 188 right now, up by about 0.6%. S&P pushing higher, trading at a record, up 22 points right now, 42.05 for the S&P. That is a gain of 11.9% year to date. NASDAQ now higher. It is up 20 points, higher by about 0.1%. 10-year yield 1.64%. Stocks higher, choppy trading as investors digest the latest batch of corporate earnings and data that shows the U.S. economy gained steam in the first 3 months of the year. After earnings, Apple up now by about 0.7%. Facebook also after earnings surging 7.3%. The price of gold down $11 the ounce. Gold down 0.7%, $17.69 the ounce. West Texas Intermediate crude up 1.9%, $65.06 a barrel. China and Israel have identified cases of the so-called Indian variant of the virus among people returning to the country. The new variant is thought to be fueling India's deadlier new wave of cases that has made it worse, made it the world's second worst-hit country. Dr. Jennifer Nuzzo is a senior scholar at the Johns Hopkins Bloomberg School of Public Health, and on Bloomberg Television and Radio this morning, she said the world cannot ignore India.
Our abilities to feel normal about this pandemic, to resume the life we once knew, that 2019 lifestyle, really depends on countries having this virus under control. And, India is in dire need of vaccines, but they're also the place where a lot of vaccines were going to be made for the rest of the world. So I do worry about the cascading impacts of this. And, I think it's a wake-up call that any country that hasn't had a serious surge of cases and hasn't vaccinated its population remains at risk.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track, Pfizer shares, they are down right now by 0.9%. Mixed bag, we've got ADRs of BioNTech, that is Pfizer's German partner, up 2.9%. ADRs of AstraZeneca down 1.7%. Moderna shares, they are lower by 1.3%. Johnson & Johnson up 1.2%. After the bell, we'll be hearing from Amazon and Twitter. Amazon up 0.4%. Twitter down 1.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It certainly is. Thank you, Charlie Pellet. Well, let's get right back to it with Dr. Josh Sharfstein, Vice Dean for Public Health Practice and Community Engagement at the Johns Hopkins Bloomberg School of Public Health, joining us on the phone from Baltimore. Dr. Sharfstein, before we went to break, you were talking to us about what exactly you were doing in Baltimore and the city of Baltimore was doing in order to get those Americans vaccinated who haven't yet gotten the vaccine. How's it going, and what exactly are you doing?
So the health department has a pretty comprehensive strategy, and they started with some of the bigger vaccine sites, which were mobbed initially with people, and then they did a big outreach campaign in coordination with the various hospitals in the city, including Johns Hopkins, and I think they visited almost every major senior housing development in the city and did vaccine clinics right there. And now they're shifting to even the idea of smaller mobile clinics, and pop-up clinics. Of course, the pharmacies also have vaccine, and they've seen a consistent rise in vaccinations, and they've also paired this direct outreach work with a lot of education on the vaccine, a communications campaign, multiple opportunities. The health commissioner and the mayor have done a great job going around the city answering people's questions. And so, I volunteer at the city health department's vaccine site, and it's just really inspiring to see so many people showing up, getting protected, doing, what they need to do and being really, really happy about it.
So is it a case of people, the access isn't there, it's just difficult for them to get the vaccine, and so that by making it easier, people are more than willing to get it, versus people who, because I know I work with people, I know people who are like, I'm just not comfortable yet taking the vaccine. So what are you finding is kind of the bigger reasons for why people maybe haven't gotten the vaccine yet?
So it really does depend. There are a lot of different reasons. Some people were in the wait and see group, that they're like, I don't want to be the first one. Let's see how it goes for the first group. Well, those people can look around and see that, their friends and neighbors are actually doing pretty well when they've gotten vaccinated. And in fact, I've even seen people who say, I'm here. The facts that it's just so much better to be vaccinated is hard to deny. And people, I think, are coming around. And so we're seeing the number of wait and see people go down over time.
Well, a question that Carol and I have been asking each other for weeks now, we want to ask you, Dr. Sharfstein, is why people have different reactions to the vaccine. For example, I got my second Pfizer shot on Sunday. I took Monday off just in case I had a bad reaction. For 24 hours, I felt fine, but from hours 24 to 36, I was lethargic, I was achy, I felt sick, and then it went away like a light switch at 7 p.m. Monday night. Why does this happen? Like, why did I feel like that? What's going on in my body?
And why did I, when I took it, basically my 2 doses of Pfizer, I felt pretty okay. I felt a little tired maybe, but no big deal.
So I couldn't answer specifically for each of you, but I can say that, our bodies react differently to vaccines, and some people get more of a reaction than others. What's happening is the immune system is basically getting trained to recognize a piece of the coronavirus. So the vaccines don't carry the whole coronavirus, they just carry a piece. So it trains the immune system. And when the immune system gets trained, you have basically chemicals being released inside your body, natural chemicals that do the training and get the cells ready in case the actual coronavirus comes in. They recognize that piece, and the immune system kills the virus. And so what you feel is a little bit of the chemicals, that sometimes cause fever, sometimes cause fatigue, the chemicals that are part of the immune system getting trained to kill the virus.
All right, and so we all just feel it kind of differently, right? Bottom line?
We feel it kind of differently. The second shot's a little bit, more intense than the first, and people then bounce right back. And, I tell people that it's really, if you get it, it's just the feeling of your immune system kicking in, and it's a good, it's a sign that your immune system is doing a good job. I think people who don't feel anything, though, their immune system is working well, too.
All right. That's good to know. That helps clarify it. Dr. Josh Sharfstein, Vice Dean for Public Health Practice and Community Engagement at Johns Hopkins Bloomberg School of Public Health, of course, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. A headline crossing the Bloomberg Emergent Biosolutions has 60 million J&J doses awaiting approval, awaiting FDA authorization to release those doses. 60 million doses of Emergent main shots have been put in vials. So again, we continue to see the vaccine production ramping up.
Let's head down to Washington, D.C. now for a check of world and national news. Nancy Lyons is in D.C. Hey, Nance.
Hey, Tim. President Biden is marking his 100th day in office by launching his Get America Back on Track tour. He's visiting Georgia today, meeting with former President Jimmy Carter. Then he'll be speaking at a drive-in rally in the Atlanta suburbs tonight. Then tomorrow he'll take his message on economic recovery to Pennsylvania. The Director of National Intelligence, Avril Haines, has been outlining threats facing the U.S. during testimony before the Senate Armed Services Committee. And as Bloomberg's Irv Chapman reports, those threats range from ISIS cells in a dozen nations to climate change destabilizing fragile countries.
Haines was immediately asked about China.
China sees itself as rising and sees the United States as declining. China believes that the United States is trying to check China's rise. China is not interested in going to war, but perceives that as a concern as these trajectories pass each other.
If the administration openly committed to defend Taiwan, Haines said, it would cause Beijing to aggressively undermine the U.S. worldwide. In Washington, Irv Chapman, Bloomberg Radio.
One lingering threat the country faces is from ransomware, when cyber criminals hack into businesses and federal agencies and seek money for a fix. A new report by a public-private task force, including Microsoft, Amazon, governors, the FBI, and foreign crime agencies, is offering a comprehensive plan, but the task force acknowledges there's no silver bullet. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Well, thank you, Nancy. So earlier today, Charlie, we learned something that more and more people have been asking about, details about Biden's tax proposal. Now we're learning that it would kick in at over $500,000 for couples. There's been a lot of questions about this because the president hasn't actually specified. He said who wouldn't be affected, but hasn't necessarily said who would and if they'd be individuals or couples.
Indeed. Specifically, Tim, that number $509,300 is according to a White House official, an unnamed official who didn't want to speak in more detail beyond the White House's outline. This according to reporting from our Josh Wingrove and Laura Davidson. The new top 39.6% tax bracket was proposed in President Biden's American Families Plan last night. You heard that unveiled on Bloomberg Radio and television. It would encompass less than 1% of American taxpayers. The official's comment suggests that the new rate, up from the current 37%, would be applied from 2022. But important to underscore, a lot of moving parts here.
As you mentioned, the official's comments are the most detailed yet on Biden's income tax proposal after the administration for weeks said that no one making under $400,000 would see their taxes rise. The proposal still faces months of negotiations in Congress where Democrats hold a razor-thin majority. I think that is key, Charlie, because just because the president is proposing this doesn't necessarily mean that it is going to be passed. Look at who makes up Congress right now. I imagine some of those moderate Democrats, especially from those states like New York and California that are already highly taxed and have high-income individuals and families, might not be so willing to jump on board.
Indeed. Another important consideration, Tim, the so-called marriage penalty. It still exists for top earners, those earning between roughly $628,300 and $1 million. They will likely pay more in taxes as a couple.
When this news first emerged last week, we saw the equity market take a little bit of a dip. It has, of course, since recovered, but we saw the way that equity markets reacted to it, but it seems like investors have taken it in stride.
Indeed.
All right, Charlie Pellet, thank you so much for the update. We got much more Bloomberg in just a second. This is Bloomberg.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, just getting word that the United States is sending $100 million in aid to India to fight COVID. The Dow, the S&P, NASDAQ all advancing. We're at session highs right now with the S&P up 28, a gain of just about 0.7%. Right now, the S&P is at a record 42.12. Higher today by 29 points, again up 0.7%. NASDAQ is up 42, up 0.3%. The Dow is up 234 points, also up by 0.7%. Stocks are higher in choppy trading as investors digest the latest batch of corporate earnings, along with data that showed the U.S. economy gained steam in the first 3 months of the year. The NASDAQ 100 index is up 0.6%. Russell 2000 index of small cap shares lower now by 0.4%. Dow Transport's up by 0.9%. 10-year yield 1.63%. Gold down 0.5%. 17.72 the ounce. Crude up 1.9%. 65.06 for a barrel of WTI. After the bell today, we'll be hearing from Amazon, up now by 0.5%. Twitter down 1.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. Well, the season finale of the Paycheck podcast is available now on Apple, Spotify, and Bloomberg.com. The episode tackles the issue of closing the racial wealth gap by acknowledging the painful history that first created the gap. Carrie Wiggum is a professor at Binghamton University's Institute of Genocide and Mass Atrocity Prevention and a contributor to this week's Paycheck podcast.
There is still the reality that many white Americans have a difficult time understanding how slavery was directly connected to, for instance, mass incarceration and police brutality today.
Well, joining me now is Joel Weber, editor at Bloomberg Business Week. He joins us on the remote from Brooklyn. And in the Interactive Brokers studio here in New York is Jackie Simmons. She's senior executive editor of The Americas, also the co-host of the Paycheck podcast, and she's joining here from Bloomberg News. A big thank you to both of you for joining me today. Joel, I want to start with you. 8 episodes. This is the season finale, and this is a particularly powerful one because it wrestles with the legacy of a descendant of slave owners who is one of our colleagues.
Yeah, and that's Claire Suddeth, who wrote a story today that coincides with this most recent episode of the Paycheck, and it immediately grabs you by the collar once you start reading it, because it is a history that a lot of Americans share, where deep in your family's history, there's something that you might not be proud of now, but it is a truth, and it was something that Claire set out to wrestle with. And I also just thought, Jackie was so seminal in this podcast. I thought it was a really interesting contrast and bookend to the very first episode, which was about Jackie's story. So Jackie, we were kind of hoping you could kind of give us an idea about how these bookends came together and how you all approached putting together such an amazing podcast.
Yeah, thanks for having me. So I would say that when we started to think about the next season of The Paycheck, the first 2 seasons were about the gender pay gap. But it was around the time post Floyd's killing when we started to sort of think, what can we do to really, bubble up some of the data, some of the history, some of the facts from the past that takes us to 2021 and sort of capture a little bit of the momentum, the frustration, I think, that's been building. And so ironically, a cousin of mine had been struggling with how to get some money from this land that basically has been in our family for many generations. And I started researching it. I knew in the back of my mind we had this piece of property in East Texas, but I never really knew what came of it. And so I started going through records, talking to family members. I made so many calls. I looked through so many, sites and just really talked to officials to really try and piece together the picture of the story. And what it really is, it sort of shows how the messiness of how Black families in that time acquired land, and then also how over time, because of taxes, sometimes because of chicanery, we lost that land. And so, as you said, it's a great, Claire's story is such a wonderful bookend to a story of a Black family gaining wealth and losing it. And then her story, which is very personal, equally personal, that sort of tells it from a perspective of a descendant of a slave owner, which is, I just think, wonderfully kind of contrast and rich.
There was this moment, Jackie, that hit me in this most recent episode, the finale, when I was listening to it today. And it had to do with just thinking about my own place in this world. And it was something that you guys talked about, the fact that even people who aren't descendants of slave owners, white people, they might not necessarily think about their connection to slavery because they don't necessarily have that connection. But at the same time, they are part of a system that has benefited from slavery, even if they've only been in this country for 1 or 2 generations.
That's correct. And I think that it was a question I asked Claire, and I thought her perspective on that was very powerful, because she was basically saying that it's not, you don't get a free pass because you can't say that you had a direct connection to slavery. As she's basically, being very honest and quite brave, I think, to come out and really share that story. You can't hide behind, something that is structural and systemic in our economy and in our social system, because you didn't have a direct descendant. So I think, everyone's accountable in some way. And I think that the most powerful thing in her story is that you just have to find the truth about it. You have to kind of reckon with the truth. You have to understand the past, and you can't hide behind excuses for not sort of being willing to not only know it, but also embrace it before we can find ways to try and fix it.
You used a phrase there that I think is, in a way, it sums up everything I've learned about through the paycheck, which is this idea that we make excuses, and so much of where the podcast and the stories that are part of the podcast come from is just sort of a real, honest to God, full assessment of some inconvenient truths, I think. And so, Jackie, I'm curious, your role in this season, how you think about it going forward. Like, what did you learn while you were working on this particular season, and how is that going to inform what's yet to come from the paycheck?
Yeah, I think the thing that stood out, there's 3 things that stood out to me really in a powerful way. I think at the sheer scale of the damage done is almost so hard for people to grasp that it makes it easier to ignore, if that makes sense. So for instance, we did the math. We calculated the cost of what was the value of a human body in slave days. And that number comes to $42 trillion. And that is when you account for inflation and other things. What was the cost of the damage done when you tear down Black Wall Street, when you lynch, when you murder? What is the cost of that? Tulsa alone, Black Wall Street in Oklahoma, that was $200 million. So, and so on and so forth. So I think, that was definitely a huge takeaway and sort of overwhelming in and of itself. The second one was really the unsung heroes that basically have the resilience, Black and white, to keep this narrative going. So people like Kelly House. I actually didn't know much about her before I started doing the research. She was a Black woman who was one of the first people to talk about reparations, and she was jailed for it. John Boyd is a Virginia farmer, I think in episode 5, who, testified before Congress about, how to get subsidies and payments back to Black farmers. So, there was a number of unsung heroes in this narrative, but there are also a lot of interesting things happening in 2021.
Well, it is an incredibly powerful series. Jackie, thank you so much for joining us to tell us more about it. I encourage everybody to check it out. You can listen to the Paycheck Podcast at Bloomberg.com, Apple Podcasts, and Spotify. Jackie Simmons is Senior Executive Editor for the Americas at Bloomberg News. She's the co-host of the Paycheck Podcast. Joel Weber, editor at Bloomberg Business Week, on the remote from Brooklyn. Guys, thank you so much. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. We move into the final hour of trading on this Thursday, April 29th. We've got the Dow, the S&P, NASDAQ at or near session highs. S&P's up 29 right now, right to the numbers at 4,212, higher by 0.7%. Today's gain, by the way, brings the S&P's rally year to date to 12.1%. To put that in context, the Dow this year up 11.2%. NASDAQ, the laggard, in quotes, up by 9.4% year to date. NASDAQ up today by 48 points, up 0.4%. The Dow up 233, up 0.7%. S&P up 30, higher by 0.7. 10-year yield 1.63%. Gold down $8 the ounce, down 0.5%. 17.73. West Texas Intermediate crude up 2%. 65.13 for a barrel of WTI. Stocks higher in choppy trading as investors digest the latest batch of corporate earnings, along with data that showed the U.S. economy gained steam in the first 3 months of the year. So what about the economic backdrop and the interest rate outlook? Mike Schumacher is head of rates and macro strategy at Wells Fargo Securities.
As far as the growth numbers, the U.S. has blowout growth last quarter. Who cares? Nobody, frankly. We all know that. It was awful last year. It's good this year. That's really baked into the cake. What's much more important is how quickly does inflation ramp up? How quickly do you get past these strange base effects the economists like to talk about? And ultimately, how fast does the Fed taper? Didn't talk about it yesterday, swatted down those questions. And we do think that's a very strong recipe for yields to go up.
T. Rowe Price Group CEO Bill Stromberg says his firm plans to bring its U.S. workers back to the office by September 13th. T. Rowe Price shares up now by just about 0.8%. MasterCard after earnings down now by 1.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
My fellow Americans, trickle down economics has never worked. And it's time to grow the economy from the bottom and the middle out.
That was, of course, President Biden in his joint session to Congress last night. Joining us now for his thoughts is Chris Liu, former Deputy Secretary of Labor under President Obama. He joins us on the phone from Charlottesville, Virginia. We should note that Chris has just been nominated by President Biden to be the U.S. Ambassador to the United Nations for Management and Reform. Chris, thanks so much for joining us.
Absolutely. Good to be on.
Congratulations on the nomination, too. What did you make of the president's joint session? He certainly, at the beginning, really leaned into what he has accomplished over his first 100 days, specifically with regard to COVID, but then really spent the next period of time focusing on what he plans to do and how he plans to do it.
Yeah, Tim, first let's just take note of the surroundings and the optics around the speech. And it was certainly one of the quieter States of the Union or joint addresses that we have seen in a long, long time. Standing there in not even a half-filled room. It was subdued, and I think it was appropriate for the moment because, we've made tremendous gains in terms of COVID and the economy, but there's still far too many people out of work. There's still far too many people getting sick and dying. And so, ironically, I think the setting and the tone was appropriate for the moment. And you're right. I mean, the speech is really, I think, really 2 to 3 different parts. One was talking about COVID, the 220 million vaccines, the 160 million checks that have gone out the door, but really sort of stressing to people, you know what, the fight is not over. I mean, we've gotten 50-some% of the American adults immunized, but we still have a lot of people, far too many people who haven't gotten vaccinated, and that's a problem, and that could be a bump in the road if we can't get over that. And then, obviously, the bulk of the speech was focused on, selling infrastructure and talking about what infrastructure means. And then finally, I think the final pivot was to George Floyd, racial justice, unity. So it's what I expected. even if the optics, theatrics of it were different from previous joint addresses.
Well, I do have a question for you on optics, because there was this photo that's absolutely making the rounds when it happened, an image from last night, continuing to make the rounds on social media today, and it's that one of the president fist bumping Representative Liz Cheney of Wyoming, a Republican, of course. But to me, Liz Cheney is the old school Republican Party, the establishment Republican Party. And in fact, to the extent that even members of her own party, who some would characterize as more extreme, have been trying to push for her ouster from committees and trying to campaign against her already. What did you make of that moment? Is that Senator Biden reaching across the aisle?
Well, I do think it's Senator Biden. I think the president wants to work with anybody, and he is, remarkably generous in his views of the opposing party, who he doesn't view as the enemy. He views as people who are patriotic Americans who simply disagree on issues, but he's going to try to find that common agreement. So I was struck by that moment as well. I would also caution about reading too much into this. I staffed President Obama at 4 different states of the union. He walks down that aisle, and even in a normal room, when it's packed, there are Democrats and Republicans on both sides. And it's just a matter of courtesy, frankly, to shake the hand of, or fist bump the hand of the commander-in-chief. And I think that's what, Liz Cheney, whose own father had been vice president, I think understood. This is, in moments like this transcends partisan politics.
And a fist bump is certainly one thing, but getting congressional Republicans on board with plans that number in the trillions of dollars is completely different. As Bloomberg Businessweek has written about, now comes the hard part, right, when it comes to Biden's plans and what he wants to do, especially before the 2022 midterms. How does Biden sell this to Republicans? I think it's clear that he's selling it to the American people. And indeed, the public opinion polling indicates that parts of these plans are very popular with Democrats and Republicans alike, specifically when it comes to infrastructure. But getting Republicans on board to spend this amount of money is going to be a tough slog. How does he do it?
Yeah, and not only to get behind it, but how to pay for it as well. But I think that point that you made is correct. If you look at the polling on infrastructure, it polls incredibly well, especially when you tell people you're going to pay for it by raising corporate taxes, in much the same way that the economic relief package from last month polled very well. And so I think the White House is going to make best efforts to find bipartisan agreement in Congress, but they know full well that if they can't do that, the American people are behind them. But getting to the guts of this, there is a bucket of things that fall into what we would call traditional infrastructure, where there is bipartisan agreement. And at this point, it's really a strategic decision about whether you pull those parts out, pass them on a bipartisan basis, and then do the other ones through the budget reconciliation process. I do think it is the preference of the White House and the president to try to do the whole thing at one time. And it's one of the reasons why you heard him talking last night about what infrastructure means. It's not just roads and bridges. It's broadband. It's the electric grid that we saw fail in Texas. It's safe drinking water. And then broadly, it's, this concept of human infrastructure that we need to be mindful about as well.
The challenge I see, Chris, is that it's hard for, I think, a lot of people to envision what this looks like years down the line. And that's been really tough for politicians who have had trouble getting things done in the long term. How does Biden help make that vision for Americans and for Republicans as well? We have about 30 seconds left with you now, but I know you're going to join us again on the other side of the break.
It is fundamentally this concept to build back better, the idea that we can't just go back to the economy before the pandemic. We really need to deal with some of these structural inequities that we've had, both in terms of what it means for everyday Americans, but frankly, the underinvestments in things like roads, bridges, technology. And we need to do that to be more competitive.
Yeah, I mean, you don't really have to travel very far outside of the United States to realize where we are when it comes to infrastructure or lack thereof. Chris Liu, sit tight. We're going to come back to you after the break. Chris Liu is former Deputy Secretary of Labor under President Obama, joins us now on the phone from Charlottesville, Virginia, and he has just been nominated by the president to be U.S. Ambassador to the UN for Management and Reform. Let's now go to Washington, D.C. for a check of world and national news with Nancy Lyons. Hey, Nance.
Hey, Tim. U.S. health regulators are pledging again to try to ban menthol cigarettes. This time, the FDA is under pressure from African-American groups to remove the mint flavor. The FDA's Mitch Zeller says menthol cigarettes are particularly popular among black smokers.
85% of all black smokers use menthol cigarettes, compared to just 30% of white smokers. And while we've seen declines in menthol cigarette use among non-Hispanic white youth, we have not seen the same declines in youth from communities of color.
Zeller says lowering nicotine content in cigarettes is still under consideration. Today's announcement on menthol is the result of a lawsuit filed by anti-smoking and medical groups last summer to force the FDA to finally make a decision on menthol. Senate Democrats are already looking ahead to the midterm elections by targeting their rivals with ads.
Republican Senators Marco Rubio and Ron Johnson and open seats in North Carolina and Pennsylvania are the focus of the ads, criticizing Republicans for not backing President Biden's efforts to boost the economy and vaccinate Americans against the coronavirus. The ads, launched today, mark President Biden's 100th day in office. The stakes in the 2022 election are high for both parties. The loss of even one Democratic senator could stall the president's legislative agenda and judicial appointments. In Washington, I'm Amy Morris, Bloomberg Radio.
Former President Trump says he's 100% considering another presidential run in 2024, and he already says he already has a running mate, Florida Governor Ron DeSantis. He spoke about it with Fox Business. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you, Nancy Lyons. Hey, Charlie Pellet, is it too early to start talking about 2024? We just heard Nancy Lyons say about President Trump is already considering it.
Let the games begin. Never too early to start talking about politics.
Well, those games certainly have begun, even though it does just feel like we got past the election of 2020. We have a Bloomberg News piece by Mark Niquette. It's among the most read on the terminal right now, talking about former Vice President Mike Pence making his first public appearance since leaving office in the early presidential primary state of South Carolina. He did that today as he and other potential 2024 Republican candidates carefully test the waters with Donald Trump looming in the background.
Exactly, an emphasis on carefully testing the waters, because in an interview with Fox Business today, former President Trump saying he is, quote, 100% considering running again in 2024, also saying he will announce his decision most likely right after the 2022 midterms. So on the one hand, you've got the former Vice President Pence out and about, basically deciding whether or not he is going to launch a run, while on the other hand, you've also got the former president himself saying that maybe he might run.
And Charlie, I think that encapsulates so well the struggle that the Republican Party is going to go through over the next 2-3 years, as it really tries to figure out, is it the party of President Trump, or is it the party of Tim Scott? Is it the party of Liz Cheney? Is it the party of somewhere in between? That's the question that it's been grappling with, and one that it will continue to grapple with.
Indeed, a fascinating question, and that perhaps answers your initial question. Is it too early to start the speculation? Keep in mind, too, that the former vice president has been keeping a low profile since leaving office. He's also kept his distance from his former boss. And also, too, keep in mind that one of his last public appearances was that day when a mob of Trump supporters stormed the U.S. Capitol.
Yeah, Pence was ushered into a secure room with his family inside the Capitol as the rioters erected gallows displaying his name for refusing Trump's demands to reject votes for Biden. You're listening to Bloomberg Business Week. Tim Stenovic here. This is Bloomberg.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Dow at the best level of the day. S&P trading at a record. NASDAQ higher as well. Let's head right over to the first word breaking news desk. Lots going on with today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks have overcome some weakness in the morning, and like you said, now trading roughly around session highs. Dow's up 244 points. S&Ps are up 30, and NASDAQ climbs by 37. The U.S. 10-year yield at 1.64%. Gold is down 8, and transports gain 127 points. Among the main 11 S&P sectors, leaders were telecom and the financials. Only healthcare fell, and leaders to the upside in the Dow, Nike and J.P. Morgan, while Merck fell 4.9% after earnings and led to the downside. Also after earnings, Apple was little changed. Caterpillar dropped 2%. And in other news, Chesapeake Energy considers a sale of its South Texas assets, and Boeing's latest 737 MAX problem spurs an FAA audit. Wrapping things up, some of the names pointing after the bell tonight include Amazon, Gilead, and Skyworks. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill, and to hear live breaking news over your Bloomberg-type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That, my friends, is a Bloomberg Business Flash.
It certainly is. Thank you, Charlie Pellet. Well, let's get right back to Chris Liu, former Deputy Secretary of Labor under President Obama. He joins us on the phone from Charlottesville, Virginia, and Chris has just been nominated by President Biden to be the U.S. Ambassador to the United Nations for Management and Reform. Chris, I want to get back to last night, and specifically tying it together with what we heard from Fed Chair Jerome Powell yesterday. If there's really one thing that ties the words that we heard from both of them together, it's jobs and getting those jobs back for those more than 8 million Americans who are still on the sidelines. That's the metric that the president is using in the recovery and the metric that the Fed is using in the recovery. How does the U.S. get there?
Well, it's not going to be easy, and I think it's right to set some context. We last month created 916,000 jobs.
Or recovered, or not necessarily created, right?
Well, and I think that's an important distinction. We recovered 916,000 jobs, but we're still 8.4 million short of where we were before the pandemic. And it's important to understand that during this period of time over the past year, a lot of the longer-term trends that we have seen, whether it is globalization, whether it is automation, whether it's the rise of the gig economy, a lot of these things have accelerated along the way. And so we can't, and again, we can't go back just to the economy of the pre-pandemic because that's already left too many people behind. So we need to understand that we need to both create the jobs, and as we started talking about before the break, roads and bridges are the easiest things to do, and this is something that's not just good for workers and manufacturers, but frankly, we need it. I mean, you drive around this country, and as you said, you see it. You walk into an airport, you ride on Amtrak, and you see the state of what we have in this country. So those are great paying jobs that actually can make us competitive and help the economy run. But there's a lot more that needs to be done in terms of training workers for the jobs of the 21st century. And this is the work that I did at the Department of Labor and getting them the skills they need. And that's part of universal pre-K. And then he adds on free community colleges because he understands that in this economy, simply having a high school education isn't going to be enough to train you for those jobs. So it's training people. Then it's actually figuring out how do we bring these jobs back to the United States, and how do we come up with new industries, which is why there's so much investment in R&D in the infrastructure plan.
How do you think the jobs market changes, or at least jobs change, on the other side of this pandemic? There's certainly a tale of two different types of companies, two different economies, the K-shaped recovery, right? We talk about it all the time. A company like Amazon, reporting earnings after the bell today, added 100,000 workers in the last year. It's massive. At the same time, you have many mom and pop shops around the United States that have been struggling to get by, or restaurants that have closed. So what does the other side of this look like?
Yeah, it's one of the unfortunate aspects of the pandemic is that while so many brick and mortar retail shops were closed during the lockdown, cities and states allowed, Target, Walmart, and other big box retailers to stay open. And that's just continued to heighten this competitive advantage that they have. Recognize also that at a company like Amazon, while they have created a lot of those jobs, a lot of them are seasonal jobs, and frankly, a lot of the people that are out there delivering packages to your door are independent contractors who aren't getting benefits. And so there are jobs being created, but a lot of these jobs aren't providing a stable level of wages or benefits that allow people really to live, middle-class lives. And then obviously the pandemic, as I said, it's accelerated a lot of these issues. Increasingly now you walk into a fast food restaurant, whether it's to cut costs or whether it was to prevent infections, they're now moving to, you order on a smartphone or you order it on a screen and you don't talk to somebody. That's a job that's now disappeared as well. And so, the structural changes that we've seen for decades really have accelerated over the last year.
Well, something kind of strange is happening right now. There's a story in this week's edition of Bloomberg Business Week that talks about Uber and Lyft and ride-hailing services and the way that customers are coming back faster than drivers want to come back. And as a result, Uber and Lyft are paying larger sums to drivers to entice them to get back on the roads and start driving again. At the same time, John Taffer from Bar Rescue, the show Bar Rescue, joined us on Quick Take earlier today and joined Carol earlier this week on this program on Bloomberg Radio and talked about how he's having trouble getting employees. And his argument is that unemployment insurance, which doesn't expire until later this year, is keeping people on the sidelines. What do you make of what's going on?
Yeah, I personally think this argument about unemployment insurance deterring work is probably overdone, because what we do know is that there are far too many states in the country where it's increasingly difficult. It's always been difficult to apply for unemployment insurance.
Right.
And even if you get something, it's certainly not enough. Even with the enhanced federal benefits, it's not enough to deter work. I do think the first aspect of this is to ensure that we get COVID under control and basically provide that level of insurance to workers so that they feel confident they can go to whatever workplace and not know they're going to be sick. So that's, I think, number one. But I do think broadly we are starting to, again, to see this mismatch of people having jobs, needing to fill jobs, and having people able to get in those jobs.
Chris Liu, thank you so much for joining us. It is always great to have you on the show. That's Chris Liu, former Deputy Secretary of Labor under President Obama, joining us on the phone from Charlottesville. Tim Stenovic, Carol Masser, live from the Bloomberg Interactive Brokers studios on Bloomberg Radio. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. You're listening to Bloomberg Business Week. Carol Master along with Tim Stenovic in our Interactive Broker Studio. That time of the day.
It is. It's the chart of the day and the song of the day.
Sounds like you are ready.
I'm ready.
He's got his dance.
I'm like 0 for, this week 0 for 3, so we'll see.
Who's keeping score?
Nobody.
Who's keeping score? All right, we're going to get to Dave Wilson in just a second. First up, though, back to Charlie Pellet, who's tracking the ups and downs of today's trade.
Score in the markets. Right now, we are looking at an update across the board here. 28 minutes to go before that closing bell clangs on Wall Street. S&P up 23. A gain right now of 0.6%. Give you the numbers and then the why in a moment here. We've got the Dow up 213, up 0.6. NASDAQ up 15. That is a gain of 0.1%. Choppy session. Investors digesting the latest batch of corporate earnings, along with data that showed the U.S. economy gained steam in the first 3 months of the year. Apple shares back on the plus side now. They are up by 0.2%, have been up as high as 2.6%. eBay, tough day there, down 9.9% after earnings. Facebook up 7.2%. Caterpillar this morning down now by 2.1%. Bottom line, though, stocks higher across the board. S&P on track for a record close right now. 4,207 on the S&P. 10-year yield 1.63%. 10-year down 7.30 seconds. Gold is down $8 the ounce, down by about 0.4%. 17.73. West Texas Intermediate crude up 1.9%. 65.04 a barrel on WTI. New York Mayor de Blasio says New York City is moving to fully reopen July 1st with arenas, gyms, stores, restaurants, and hair salons returning. Speaking this morning on MSNBC, de Blasio said, quote, "We are ready to take that pathway to a full reopening, but across the country seems a lot of people are just wondering when we might see a complete end to those mask mandates." Dr. Jennifer Nuzzo is a senior scholar at the Johns Hopkins Bloomberg School of Public Health.
Some people have proposed that once we get down to sort of seasonal flu levels of infection, that sort of changes everything. We don't maintain restrictions and make people wear masks in the context of seasonal flu, so that perhaps that will make it feel much easier to do that. But we haven't actually defined it as a country, and I wish we would.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track, Pfizer shares down 0.8%. ADRs of BioNTech, its German partner, up 2.9%. ADRs of AstraZeneca down 1.4%. Moderna tumbling 1.3%. Johnson & Johnson up 1.1%. After the bell, we hear from Amazon, up right now by 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. Though.
Wait a minute, can we just set the record straight? You don't have to be old to know good music. I'm just, I get a little sensitive about this. My daughter's 18 and she knows a lot of good blues players.
Yeah, she's cooler than I am.
Well, maybe that's the case.
Yeah, I'm not going to argue with that.
But you have to admit, there is a tendency for people to kind of latch on to the music it hits when they're, growing up.
Dave. All right, let's do the chart of the day.
Okay, fine.
Fine.
What we're talking about here is the farm. It's actually up on the farm. That's the headline for the chart. And it has to do with what's going on with crop prices. Mondelez International came out with results this week, and certainly other food makers are following. But Mondelez was talking about how they were going to price away inflation. That's what they said on their conference call after putting out their first quarter results. And they have a fair amount of inflation to price away if you're looking at, agricultural prices. And Deutsche Bank had this chart out that followed the Bloomberg Agriculture Spot Index, of course, one of our indicators. So I took a look at it, and they were focusing in on the year-over-year change, and that's what the chart shows. This week, you saw that particular indicator get up above 75%. So that's how much prices are up, for this index at least, from a year ago. And we're getting really close to peaks that we saw in 2008 and again in 2011. Just above 80% for 08 and near 80%, a decade ago. So, we're talking about the highest levels in 10 years, basically, at this point, in terms of how fast these prices are going up. So you got to figure that other companies are kind of in the same boat as Mondelez, to the extent that they rely on crops for, shall we say, raw materials.
We were talking about this with Mike McClone
I was just going to
today.
say that.
It's in our week. We were talking about it, and it's, talking about commodity pricing.
Yeah.
Food pricing, because it's, for such a long time, it kind of was pretty steady, and then all of a sudden we've seen a big blip.
And what was that word that I used, right? And that we used when we were talking
Transitory?
Transitory.
Maybe,
and
yeah.
Mike McGlone kind of said, hey, this is something that we see as transitory. What do you say, Dave?
Well, certainly if you look at the history, we're getting really close to, the peaks of a decade or more ago. So you can argue from that perspective. But the real question is, are you going to see the follow-through in terms of, say, increased supply that would bring the price down?
Right.
What's
For
interesting?
the moment,
Yeah.
let's talk about this. The chart, if you haven't seen it, get it to me, and I will send it to you with the explanation that goes with it and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
I know I say this a lot, but I go back to basic supply and demand. I think what Mike talked about, inventory levels being, worked down, and that probably bodes well for future, like GDP numbers, because everybody's going to be ramping up again. And I do wonder, Dave, whether we start to see more suppliers come on, or especially when it comes to some of those, initial food input prices.
Yeah, absolutely. There is that potential down the line, which is, I suppose, why those past increases didn't hold up.
Right.
We're talking about commodities. We're not talking about unique products, which I am with my stock of the day, by the way. It's a medical device maker called Atricure. The ticker is ATRC. Shares rose to a record after the company won U.S. approval for a therapy to treat persistent AFib, so an irregular heartbeat.
It's on a run this year, up about 37%.
It is.
If you want to know more, you can check out Dave's Stock of the Day. It's just after 4:15 p.m. Wall Street time. It's on Facebook, LinkedIn, and on Twitter @TheOneDave.
Is that on your playlist, Dave Wilson, that song?
My playlist. Well, it will be on my monthly playlist of Chart of the Day intro songs, which is coming out tomorrow. It's the end of April.
I was thinking about that, giving you a little bit of an assist here, Dave Wilson.
There you go.
All right, good stuff as always. And be sure to check out, as Tim mentioned, Dave's Stock of the Day, 4:15 p.m. Wall Street time, on Facebook, on LinkedIn, and on Twitter @TheOneDave.
I'm always excited about the end of the month, right? That
May.
playlist. Yeah, exactly.
Just around the corner, man.
Let's go down to Washington, D.C. and get a check of world and national news headlines with Nancy Lyons. Hey, Nance.
Hey, Tim. President Biden is celebrating his 100th day in office by kicking off his Get America Back on Track tour. He's in Georgia this afternoon visiting with former President Jimmy Carter and attending a drive-in rally tonight in the Atlanta suburbs. Vice President Kamala Harris is also on the road, speaking this afternoon in Baltimore. She recounts where we were 100 days ago.
More than 10 million Americans were out of work. Schools were closed. Businesses were closed. And beyond the pandemic, our democracy was under assault. And our capital had just been attacked by insurgents.
Harris says despite all those challenges, the nation has risen to meet the moment. The White House is getting closer to a plan to boost vaccine distribution to the rest of the world.
The White House says its focus on increasing global vaccine supplies may mean boosting U.S. manufacturing rather than waiving intellectual property rights for drug makers. Progressive senators like Bernie Sanders and Elizabeth Warren have pressured the U.S. to back a waiver proposal from South Africa and India. But White House Press Secretary Jen Psaki tells CNN U.S. Trade Representative Catherine Tai hasn't made a final recommendation. Psaki says Tai's been meeting with stakeholders on both sides. Drug makers argue a waiver would undermine incentives to invest in research and development. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Tim Stenovic. And there's a story on the Bloomberg by our Martin Braun. And talks about Long Beach, known for its raucous West End bars, Irish Day Parade, and 2 Mile Boardwalk. Well, locally, the city of 35,000, it's on a barrier island, 25 miles east of New York City, so not too far from where we are, Tim Stenovic. Also renowned for fiscal mismanagement.
Yeah, that's right. Residents still paying off more than $8 million in debt issued almost 7 years ago. That was to cover a budget deficit. An investigation last year, though, by the Nassau County District Attorney found that for almost 2 decades, Long Beach had improperly overpaid employees, including the former city manager, millions of dollars for unused vacation and sick days.
This is what I call a wait, what moment. It's among our most read stories on the Bloomberg terminal. And apparently some of those woes are only getting worse. A $131 million court judgment to a developer in a 30-year legal battle is threatening it with insolvency, and Long Beach has hired advisors to craft a debt-cutting plan. It's a kind of, you know, we hear about municipals or municipalities where there's just bad management and things just go wrong really quickly.
Well, it kind of makes, it kind of speaks to what Bernadette Martin, the owner of Bob's Natural Foods on Park Avenue in the city, told our reporter there. Quote, if the city of Long Beach was a business, it wouldn't be a business.
Well, and here's what's interesting. Municipal defaults and bankruptcies have become more common, safe to say, in the last decade. They're still, though, pretty rare overall. There were only 2 municipal bankruptcies last year: Fairfield, Alabama, city on the outskirts of Birmingham, and the Jack County Hospital District in Texas. So even though, and especially I think we've been anticipating more things to happen because of the pandemic, it's kind of rare.
Well, that was a real concern for people if we think back to a year ago. What would happen to municipalities? And I think it could have been a completely different story had there not been federal aid for some of these states and some of these cities. But a big concern that a lot of people had was, hey, what is going to happen to municipal bonds that somebody owns for one of these areas if tax revenue is drying up, if toll revenue is drying up, and if the pandemic is making matters worse?
You said the quote that sums it off all. If Long Beach was a business, it wouldn't be in business. All right, you're listening to Bloomberg Business Week. We're going to count you down to the close shortly. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ all advancing right now. Stocks at or near session highs. Let's begin right with the numbers, with the S&P up now by 30. That is a gain of 0.7%, bringing the S&P's year-to-date gain to 12.1%. The Dow's up 259, up by 0.7%. We've got NASDAQ up 36, a gain there of 0.3%. 10-year yield 1.63%. Gold down $7 the ounce at $17.74, down 0.4%. West Texas Intermediate crude up 1.7%, $64.98 a barrel. Stocks higher, choppy trading as investors digest the latest batch of corporate earnings and data that shows the U.S. economy gaining steam in the first 3 months of the year. After the bell, big earnings from Amazon, up now by 0.3%. Also, we'll be hearing from Twitter, down now by 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10 minutes left, 10 and a half minutes left in today's trading session.
Carol.
You're just saying that because you and I have been running since I don't know what time. I know me from about 5:30 this morning, but you much earlier.
No, same time.
All right, let's find out what Brad McMillan, what time his day started. He's Chief Investment Officer and Managing Principal at Commonwealth Financial Network. They've got roughly $232.5 billion in assets under management. Brad back with us and on the phone from Waltham, Massachusetts. Brad, it is good to have you here with us. How early did your day start?
I usually get up about 5:30, the same as you guys. Maybe it's a financial thing.
Yeah, maybe it is a funny, right? Just to
I
start
heard
before-
somewhere the early bird catches the worm. I heard that, so I'm still trying to find the worm.
The early bird is a little tired today. So Brad McMillan, the markets all over the place. You know, lots of earnings this week. We had the Fed meeting. What's kind of driving your thinking and your team's thinking right now when it comes to investing?
Big picture, everything is awesome, and they call me Eeyore
Really?
at the office, so I don't say that with any real joy here, Carol.
Okay.
You know, when you look at what's going on, the economy is doing very well and looking to accelerate. We're getting to normal. The Fed is very explicitly saying we're all in. We're going to keep pushing behind us, and companies keep making more money than anybody would ever have thought. So there's not a lot to get upset about, and I think markets are just reflecting that.
Unless, of course, you make under $15 an hour. I'm just going to put that out there, Brad.
Fair point. And from a market point of view, everything's great. If you're one of the many people still out of work, especially in the lower income tranches, it's a totally different story. You're
Well,
absolutely
that's
right.
exactly what I was going to say. If there's one takeaway yesterday from the themes that tie together the president's address last night and Fed Chair Powell's comments yesterday, midday, it's really those 8.4 million unemployed Americans who are still out as a result of the pandemic. So help us make sense of what we're seeing from these companies and their outlooks, while at the same time hearing from companies like Lyft and Uber that it's tough to get drivers to actually come back onto the roads as quickly as customers want to.
Well, I think you have to remember two things. First of all, the pandemic is not over yet. And a lot of the jobs that are still out there going begging are jobs that involve dealing with the public. So I think there's still a very real reluctance on a lot of workers' part to put themselves in that situation if they don't have to. And because of the federal stimulus programs, they don't have to yet. So two things are going to happen. First of all, the stimulus programs are going to start to expire. And second of all, the viral situation is going to continue to get better. So I think you're going to see that fade out over time. People are going to move back to work in a very natural way, but we're not there yet.
So how are you playing the market? Because there are certainly some spaces, including some of these big tech names, it's a little heady. And I am curious, when you look to commit new cash, where do you want to go? I mean, everybody kind of is like value, value, value. It keeps coming back. And then the growth just kind of overtakes it. Where would you be committing new money?
I don't think it's about value versus growth.
Okay.
I think one of the big things that's hit growth is rates were going to go up and then, well, maybe not. So, that's what's playing out. But it's about what companies are positioned to do relatively better. And I think if you look at the housing industry, that's just going from strength to strength. And that's not going away anytime soon, given the demographic push behind it and the supply and demand situation. You look at financials, for example, they're going to continue to do much better as the economy reopens. So it has nothing to do with growth in value. It's what companies can actually start to outperform.
I'm wondering when it comes to housing, because that was another thing that the Fed chair was asked about yesterday. What ends up happening to the housing market? Because prices can't just keep going up. And look, I'm speaking from the experience of people who live in the Northeast and New England and tri-state area in California. It's somewhat of a different story around the country, but at the same time, it is a really hot market right now.
Well, when you look at, there's the big story in housing is, we've talked about mortgage rates, everybody knows that, but take a look at the demand side. You have the largest generation in history, the millennials, and they're just getting to the point where they got to go buy a house. Not only do they want to because of the pandemic, but they're hitting 40, they're hitting their peak earning and spending years. They've got kids now. They need to go buy a house, and we've been underinvesting in housing for a decade now, ever since the bust.
Yeah, I find it interesting that it was for such a long time coming off of the housing crisis, Brad, that we were talking about oversupply, right? And there were private equity companies that, moved into it, Blackstone, among others, where it became a really smart investment. And then all of a sudden, we just don't have enough housing. And it's safe to say home builders, a little gun shy. And I think the whole housing market, right, that they're not going to build until they make sure that the demand sticks around, it's consistent.
That's exactly right, Carol. And it's not just the housing industry, it's the supply chain. When you look at lumber prices, why is that? There's still a lot of trees out there. Well, a lot of sawmills, a lot of lumber companies backed off because they weren't seeing the demand there. And that's why we have the lumber prices spiking.
I was driving around up in New England, Maine, a lot of lumber, companies and mills and stuff.
The way life should be.
It is beautiful, but they were quiet. And I know it was weekend and stuff, but I didn't feel like if they were looking to meet incredible demand, right, they might have kicked in extra shifts of the weekend, and I didn't see that.
Look, the story when I went to college decades ago at this point, I went to college in Maine, and the story was those mills no longer even operated.
Yeah, which is interesting. You do wonder where it goes.
Yeah.
All right, so where do we go from here, Brad? How do you see it? Is the rest of the year kind of baked in a little bit, or safe to say we know the Fed kind of has our back here? They're going to be patient. They're going to let inflation run hot. And so for folks seeking yield, we're going to see more risk being taken on, or I don't know. How do you see it? You said everything is awesome at the beginning.
And that's right. I mean, what's interesting to me is when you look at the market and the run-up we've had, people are saying, wow, this is crazy, but it's not. If you go and you look at it on a forward price earnings basis, based when earnings estimates go up, so is the price, and it's stayed at about 22 times. So as we can see, earnings expectations continue to grow. I still think there's still some more upside there, and potentially more than people think.
So what is the specific opportunity, especially when we are at a point where companies we're at the tail end of earnings season, or we're getting to the tail end of earnings season. This is the busiest week for them. What are you hearing as the takeaways, Brad, from what we've heard from executives? Because we're still not getting a ton when it comes to company outlook. I mean, look what happened with Tesla, for example.
I think what's going on here is it's the dog that's not barking. I mean, I agree with you. Executives are still cautious. They don't want to go out there. But I'm hearing a lot less of the negative, the world is coming to an end. They're not ready to be positive yet. They're still too cautious.
to the communication services sector.
Yeah, as we've been mentioning, Caroline, it's Facebook, it's Alphabet, it's Twitter, it's Comcast, it's Charter, it's all of those communication stocks that are leading us higher here as we head into that closing bell.
But on the drag down, it's been autos, it's been worried about chips. As we get that closing bell, as we get settlement here in New York and across the world, Dow Jones up 0.7% on that particular price-based index. We're looking at the S&P 500 at a new record high, 4,211 is where we settle, up 28 points. 0.7%. We really saw actually, back in the red at one point today. So the managed that we see that demand drive us higher towards the end of close. Russell 2000, though, your small caps is where the weakness really lay, as some of the technology names within that index didn't fare well, off by 0.4%, 8.69 points lower. And lastly, well, we've got to bring it out to really what happened in terms of big tech, because it was big tech led higher by the likes of Facebook, by the likes of course, some of the Apple managed to give us a turnaround, and the NASDAQ trading higher on the day.
I'm going to pull a little bit of an audible because Cirrus Logic just coming out, crossing the bell here. Ticker CRUS. Stock is down about 7.8%. We continue to watch these tech companies. We continue to watch names within the semi sector. And the company talking about first quarter gross margin of 49 to 51%. The estimate is for 51.5%. But also, let me just pull up, forgive me as my Bloomberg runs past me. Actually, let's go to Amazon because that's certainly an important one.
Yeah, Carol, we're seeing first quarter AWS net sales coming in strong beat, $13.5 billion. That was estimates of $13.1 billion. Total first quarter net sales, $108.5 billion, wow, beating estimates of $104.6 billion. They beat on the bottom line by, well, $6, $15.80 versus estimates of $9.70. So you're seeing really a top and the bottom line as operating income is better. Online store sales, those net sales, Caroline, $15.9 billion versus estimates of $50.6. I could keep running you through the horse race, but frankly, it just looks like even the forward guidance way better than expected on the top line.
And this is a year where, of course, we now start to see some of the costs that have been pushed up because of COVID, some of the protection they've had to give to some of their employees, for example, dialing back down again as the world, we hope, continues on this reopening path. Many felt that for Amazon, margins is where it's going to be for the rest of the year. Net sales continuing to increase overall. And as you say, AWS, this has been the workhorse for Amazon as well. Amazon Web Services really putting it out about $13.5 billion. So this is seeing more than double-digit growth for the leader when it comes to overall provision for this sort of area of web services, Tim.
Yeah, absolutely the leader. But hey, there is a lot of competition now. Microsoft is among those who are competing closely with the company when it comes to Amazon Web Services. But make no mistake, Amazon invented this category. It's not by any means close to the biggest category and the biggest segment that Amazon has, but it is by far the most profitable. And one thing that investors have been concerned about recently is profit margins there as the competition does increase. We saw those numbers from Microsoft earlier this week, and then Google, as we know, increasingly getting into it with Google's cloud products as well.
You know, what's interesting, too, is that outlook, second quarter net sales, because, listen, what we've been wondering, everybody, about is what happens as the world reopens? What happens to e-commerce sales, which has been so important to Amazon's bottom line at this point? We're going to be listening on their call with analysts about what they have to say about forward guidance and even more about visibility and outlook, because as we all move out into the world to experience things, what does that mean for Amazon specifically, Taylor?
You know, and you just have to laugh at some of the headlines we get from Jeff Bezos, who's putting out a comment, of course, in the press release, talking about his babies, right? They're 10 and 15 years old. It is Amazon Prime, he's saying, turning 10. You have more than 175 million Prime members, talking about that streaming. And in 15 years, that's his second child, AWS becoming a $54 billion annual sales run rate business, really competing. It's accelerating 32% year over year. It is really highlighting that is that high margin business, Caroline, the cloud sales competition, but indeed holding their own.
And if we hold on to these numbers in after-hours trading, in proper trading tomorrow, this will be a record high for Amazon. Of course, remember, we're looking for that sort of level of 3,500 or so, and it's now at 3,655. So record high in terms of share price for Amazon if they hold on to these after-hours gains. Meanwhile, Gilead is coming out. Well, let's talk biotech. It's maintaining its quarterly dividend of 71 cents a share. They're coming out with first quarter revenue, $6.4 billion. The estimate, though, was for $6.74 billion, so it is a miss overall. Adjusting earnings per share share, coming in just ahead of expectations, $2.08. The estimate was for $2.07. So clearly, once again, biotech, some of those other non-COVID related companies, Carol, not doing as well.
No, not as well. And I got to say, though, we're going to all be focusing on throughout the evening into tomorrow's trade about Amazon and watching that trade here in the after hours because, again, some of these numbers, some of these companies, we know they've been growth companies, but they continue to blow away some of the estimates. And when you look at some of their numbers and what they say about the outlook, again, going back to the second quarter net sales number, 110 to 116 billion, that is above the estimate that's out there of 108.35 billion, Tim.
One number that I'm keeping an eye on is when it comes to guidance is how much the company is saying it's going to spend on COVID-19 costs and costs related to COVID-19. The company's saying Amazon guidance assuming $1.5 billion of costs related to COVID-19. Just think back over the last 14 months and how Amazon has been one of those essential businesses, what the company has done when it comes to delivering goods to Americans and internationally during the pandemic.
Tim, let's take a look at Twitter. We're getting those earnings coming out as well. We're seeing let's start with their first quarter revenue here. Just a slight beat of estimates as they're seeing average monetizable daily active users of 199 million, slightly beating estimates, Caroline, of 198.8. That first quarter ad revenue, slight beat, again, 899 million versus estimates of 897. That second quarter revenue might look a little bit light, 980 to 1.08 billion. The estimate was 1.05 billion. I'm wondering if the share price reaction is maybe a lighter side of some of the revenue in that forward guidance. Otherwise, it doesn't look like a huge blowout, Caroline, but just a slight beat perhaps on some of those first quarter numbers.
But reflecting what Pinterest had warned about earlier in the week, the fact that growth of users is going to be slowing down. Monthly daily active user growth rates will be in the low double digits for the rest of the year. We're getting out, people. We're starting not to be glued to our screens. And maybe, just maybe, we're not going to be looking at Twitter quite so much, Carol.
You can take it, though, with you on your phone. The only thing I can think about, Caroline, is I think about that February analyst meeting. They hadn't held an analyst meeting in years. They talked about doubling annual revenue to $7.5 billion by 2023. What investors want to know is, how do you get it? Do these growth rates that you're showing me in this quarter and what you're talking about in the outlook, does it get me, Tim, to that revenue goal?
Yeah, and one thing that they talked about was their ambitions over the next few years, and actually made the stock move significantly because the company was really ambitious about what it wants to do and how it wants to change the product. Twitter's product has not changed significantly since the actual founding of the company more than a decade ago. They've just added more characters. One thing I'm going to be listening for on that earnings call later today is any commentary about audio as Clubhouse gains momentum. We had that Bloomberg reporting earlier this month that talked about how Twitter was in talks to acquire Clubhouse for a significant sum of money.
Yeah, you know, Tim, I'm just reading through the Twitter press release, and they are saying that they expect total revenue to grow faster than expenses in 2021. But Caroline, you are seeing some of their expenses rise about 21% on a year-over-year basis. They are indeed mentioning that iOS 14.5 change as well, that I believe we saw Facebook mention as well, that change, of course, that we see with Apple. So they're a little hesitant here, saying how much faster revenue grows over expenses depends on various factors, but of course they're going to try to do that via execution.
It's interesting. Now, Jack Dorsey, of course, CEO of Twitter, also CEO of Square. He's a big lover of crypto, guys. And I look across to what's happening over at MicroStrategy, because remember, this was the company that first sort of got into the fact that they weren't just going to hold cash on their balance sheet. They were going to start holding Bitcoin. MicroStrategy coming out with its first quarter results saying, a clear example of our two-pronged corporate strategy, growing our enterprise analytics software business and acquiring and holding Bitcoin is generating substantial shareholder value. First quarter adjusted earnings per share coming at $1.54. That is a big beat over the 82 cents that was expected. And they also see revenue 122.9 million, the estimate for 112. So a beat at MicroStrategy, but only up 0.75% in after-hours trading, Tim.
Yeah, MicroStrategy, absolutely a crypto play. The company up nearly 70% year to date. The numbers that we're seeing, first quarter adjusted earnings per share, $1.54, beating estimates in that first quarter. Carol?
The big one, Amazon, though, Grand Slam, as our live blog is saying, and we're definitely seeing that stock play out that way in the after hours. All right, guys, that's going to do it for our cross-platform coverage of the market close live on Bloomberg Radio, Bloomberg TV, and on YouTube. We'll see you again next time, same place, same time.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so it's kind of a tale of two tech companies, no doubt about it. And we saw Amazon really taking off following its, I think it's safe to say, grand slam, as our Spencer Soper said, their report.
First quarter revenue and earnings beat expectations, as did cloud computing sales and income. The outlook for the current quarter also beat expectations, easing concerns about a post-pandemic let-up in sales. I think the big question that a lot of investors and a lot of analysts have is, well, look, this is the question, Carol, that they have right now. What does behavior look like on the other side of the pandemic? That's why we saw Pinterest fell. That's why we're seeing Twitter fall right now. But when it comes to Amazon, if you've been using Amazon more, you're probably still going to use Amazon more after the pandemic.
Yes and no, baby. What if you're going to more brick and mortar stores, right? If you're not buying as much online, well, I guess, time will tell ultimately.
It will.
Right?
I'm just using, and look, anecdotally speaking, I'm using my own experience. We had never ordered online groceries.
Well, that's a big thing that I think will stay with.
I think so.
Exactly. But there are different choices. I don't know. It's we will see, do we do as much streaming? Are we online, right? That's a big thing of Amazon's model as well. But listen, for the moment, Amazon just increasingly is a bigger part of our life. I saw a story earlier today, too, that talks about Amazon passing Walmart and U.S. retail sales in 2025. This is a report coming out. Walmart, the biggest U.S. retailer, but Amazon definitely nipping at its heels.
It's going to happen sooner or later.
Yeah, exactly. All right. Definitely watching some of those tech names here in the after hours. Let's get on over to World and National News. For that, we check in with Nancy Lyons. She's in our D.C. studio. Hey, Nancy.
Hey there, Carol. Vice President Kamala Harris is touting the first 100 days of the Biden administration.
We had faith that the American people, when given the opportunity, would come together and would rise to meet the moment. And you have.
Speaking in Baltimore this afternoon, Harris promoted President Biden's sweeping infrastructure plan, saying it will create good new jobs. Whether the agencies that investigate domestic terrorism need more staff and money was addressed by a House Appropriations Subcommittee hearing today. Bloomberg's Irv Chapman has more.
The Assistant Director of the Federal Bureau of Investigation, Jill Sanborn, was asked about the role of the Internet as an organizing force, including ties to foreign groups.
We see individuals potentially initiate their first relationship or connection with a like-minded individual in the open social media forum, but then often they move those conversations to some sort of encrypted application and allows for the facilitation of like-minded individuals to link up across the globe.
Sanborn said the FBI consults with foreign intelligence agencies that are also keeping tabs on potential terrorist threats in their countries. In Washington, Irv Chapman, Bloomberg Radio.
Some Democratic and GOP lawmakers want independent authorities to investigate sexual assault cases involving the military. How the armed forces deals with these cases was brought into question last year when Fort Hood soldier Vanessa Guillen was murdered. Her family says she was harassed by another soldier before she disappeared. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Now let's check in with Charlie Pellet for a business flash.
Thank you very much. Two major earnings stories after the close of trading today. Amazon.com first quarter EPS $15.79. Estimates $9.69. Net sales $108.5 billion. Estimates $104.56 billion. Also, Amazon said it sees second quarter net sales in the range of $110 to $116 billion. Estimates for $108.35 billion. After hours, Amazon shares up now by just about 3%. Twitter reporting first quarter revenue $1.04 billion. Estimates there $1.03 billion. We are seeing Twitter shares plunge after hours, down now by 8%. Record on the S&P 500 index today, up 28 points to 4,211, up 0.7%. The Dow up 239, up 0.7. NASDAQ up 31, up 0.2%. NASDAQ 100 index up 0.5%. Bottom line, record on the S&P up by 0.7%. Stocks advanced as investors digested the latest batch of corporate earnings, and data showed that the U.S. economy gained steam in the first 3 months of the year. 10-year yield 1.63%. Gold down $7 the ounce, down 0.4%. 17.74. West Texas Intermediate crude up 1.7%. 64.93 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It certainly is. Thank you, Charlie Pellet. Well, let's get to James Thompson, partner at Buybox Experts, former business head of Amazon Web Services, or Amazon Services, joining us on the phone from Seattle. Hey, James, let's go through these numbers here, because even though Charlie talked about them just now, they are certainly worth repeating. For Amazon, first quarter net sales beat estimates, $108.5 billion. First quarter operating income beat estimates, $8.9 billion. Online stores net sales, $52.9 billion, handily beating estimates there. And then here's the big one. This is the guidance. Sees second quarter net sales, $110 billion to $116 billion. The estimate was $108.35 billion. So how's Amazon doing?
Well, you give me 2 minutes to look over the earnings numbers as they're rolling.
Welcome to my life.
There you go. So a couple things to think about for Q2. Amazon's likely going to do Prime Day at the end of June, so that's going to count in the Q2 numbers.
Yeah, this is a holiday that Amazon invented, that inspired by Singles Day.
All for inventing holidays. If it creates capitalism, invent the holiday.
Okay.
So that's an Amazon holiday. We're now in year 5 or 6. So Amazon's got most of the kinks worked out in the system. It's interesting to see that they're moving it, but most likely, and again, they haven't announced the exact date, but all indications suggest that it's going to be before the end of June. It's interesting that they're moving it a little bit earlier, and I think there's a few interesting things that tell us that there may be issues on the horizon. The fact that they're doing Prime Day in June, at the same time that we're seeing Amazon placing big bets with brands, we're seeing Amazon placing 6 to 9 months worth of inventory orders all at once. That they want to make sure that those products get on the ships, get into the United States, and get into their warehouses before Q4. We haven't seen Amazon do this kind of thing before. It's an interesting move. It means their warehouses are going to be fuller than usual by the time we get to the beginning of Q4. As much as Amazon has been able to continue to build out its facilities, different fulfillment facilities, the reality is demand for prime space from both vendors as well as third-party sellers. Everybody wants to be prime eligible. That's the goal. And it's hard to keep up with the demand. And Amazon's struggling, I believe, to keep up. And that's going to create a situation where come Q4, a lot of these successful third-party sellers that have become completely reliant on FBA, on the Fulfillment by Amazon program, they're going to find that they can't get enough inventory space. And I think we're going to see a situation where between the continued recovery of the economy as COVID gets under control and Amazon struggling with inventory space, I think by the time we get to Q4, that's when we're going to see that Amazon has actually not been able to keep up with the demand for its marketplace.
So then what happens to Amazon's business? Do we get to the time around the holidays this year and Amazon says, hey, in order to actually get these products to you by the time that you expect, you need to order them by this date? Or is it something that's more severe than that you're actually not able to find what you're looking for on Amazon and it's not able to get to you?
Well, let me be clear. Amazon always puts the customer first. So I don't think we're going to see customers being told that you can't have this or you can have it, but you're going to wait much longer than usual. I think instead what we're going to see is companies that sell products that aren't necessarily the absolute top-selling items, they're going to find it very difficult to get their products into the Amazon warehouses. So consumers are likely going to be moving to a model where you can have the best-selling product, but you can't have the 5th best-selling product or the 10th best-selling product. And, Amazon's all about choice. I want to be able to go there to find everything I want. And if I can't find the purple polka dot version I need, where do I go? Well, I don't know where to go after looking on Amazon. So that's one major trend I'm looking at, and I'm anticipating based on some of the stuff we're already seeing with our first-party and third-party clients. There are issues on the horizon.
At a time when there's so much uncertainty and we're not necessarily hearing guidance from every company out there that's reporting earnings this quarter, the company's saying that it's going to see net sales from $110 billion to $116 billion, handily beating estimates that were at $108.35 billion. This gets to that central question of what life looks like on the other side of the pandemic. It's something that Pinterest talked about earlier this week. It's something that Twitter made reference to in its own earnings that just came out. To what extent people continue to use the products that they used during the pandemic. Is Amazon to you in a different position than other companies because people kind of have been known to keep their habits when they start to use Amazon products and services?
I start again with the customer, and I ask myself this question. If I'm a customer And during the pandemic, all those retailers I went to before the COVID started, I wasn't interacting with those retailers. And by the way, a lot of brands who are exclusively reliant on retailers to tell their story to consumers, a lot of those brands were hurt because the retailers weren't open or the retailers didn't have well-established e-commerce in place for COVID. So I then look at the alternative. I go to Amazon. Guess what? I can find what I want on Amazon, and Amazon can market specifically to me and my needs. As a consumer, if I know that I can go somewhere and Amazon's going to be looking out for me and suggesting products that actually are relevant to me, I can engage with the brands that I want on Amazon. That's pretty enticing when every other retailer has struggled to be able to continue that discussion with consumers during COVID. So the long and the short is I expect Amazon is going to continue to do very well post-COVID because consumers who either did or didn't have Amazon experience pre-COVID, they're going to say, you know what, this experience is a whole lot more robust than anything I can get with my local retailer. Yeah, I like to go in and try stuff out, but the reality is they don't always have my color, my size, and they certainly aren't as good at making recommendations to me as Amazon is.
I'm wondering about other highlights from the earnings report. And I know you didn't necessarily work on this when you were at Amazon, but Amazon Web Services has certainly turned into an incredibly important part of the company's business. I mean, essentially starting out as an experiment at the company, they invented a category there. Amazon Web Services revenue for the first quarter beat estimates. It was $13.5 billion. Estimates were at $13.09 billion. What is that telling you about how Amazon is still able to beat those estimates, even though we're seeing increased competition from Microsoft and earlier this week hearing from Google as well?
While I'm definitely not an AWS expert by any means, one of the key things to keep in mind here is that as more and more companies realize that they need to have an e-commerce presence, even if they're not selling on Amazon, they need to have the backbones. They need to have the systems in place that allow them to become e-commerce relevant. And AWS helps brands to become more efficient. It helps them to host different types of capabilities for consumers or customers. So Amazon's going to continue to grow. The whole process of how do they communicate expectations and how do they manage that, that's an art that every company needs to figure out. We will continue to see more and more demand for AWS. I think back to my time at Amazon, one of the most impressive things about AWS was that they are aggressively going out of their way to lower prices as often as possible. That's an amazing model to have, to be in a position where you're trying to lower the cost to every consumer, or in this case, business customer. And that's a model that not necessarily every other cloud service company has been able to keep up with. You've got this huge competitor called Amazon. They're aggressively lowering prices regularly, and you're trying to grow to beat them, and you're faced with a lower cost competitor every month. It's an interesting model. So at the end of the day, AWS will continue to grow and continue to be a big cash cow that helps to fund other parts of the business. And even if they start to slow down at some point, they are learning so much from different types of customers about how to offer better services to the next customer that needs AWS capabilities. Amazon's going to be a major player for decades to come in this space.
James, I want to go back to something that you talked about earlier and the challenges that you potentially see Amazon having, was specifically with the Fulfilled by Amazon program later this year. Explain what exactly it is, and because I don't think consumers necessarily know that when they're ordering something on Amazon, even though it does say, and some consumers do look where it's coming from, it's not necessarily coming from Amazon.
Many third-party sellers, rather than fulfilling the orders themselves, they will ship products in bulk into Amazon's warehouses. And Amazon will actually do the order fulfillment when the customer places the order. So when you buy that product from a third-party seller on Amazon and you magically get an Amazon-branded box, that's because the box actually came from an Amazon facility. Amazon basically serves as the warehouse and storage and order fulfillment service for that third-party seller. Well, there's only so much facility space to put third-party seller inventory. And while Amazon can scale up the number of orders they fulfill, especially in Q4, there is a physical limit to how much inventory can be in a warehouse at any given point. During my time at Amazon, we regularly had to deal with situations where in Q4, whatever warehouses were available were close to capacity. Fast forward a decade, and now there's that many more facilities, but there's that many more consumers that want products that are magically delivered to them within 1 day or 2 days. That requires Amazon to have this huge network of fulfillment centers, but also Amazon to have what they now do. They own the last mile delivery for somewhere north of 65-70% of all orders that are Prime eligible here in the U.S. That's just a massive investment of capital. It's not an exciting investment, but the reality is it creates a huge moat and advantage for Amazon relative to every other retailer and brand out there. So good times as a consumer wanting to get stuff delivered to you fast.
Yeah.
But it's hard for Amazon to make that promise happen without continuing to scale its business.
Good times for shareholders as well. James Thompson, thanks so much for joining us. James Thompson is a partner at Buy Box Experts. Our former business head of Amazon Services joins us on the phone from Seattle. Coming up next, we're talking to Kurt Wagner, breaking all down Twitter earnings. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Bloomberg Business Week coming at you live from the Interactive Brokers Studios in New York City. We are making our way through Twitter earnings, Amazon earnings, a slew of earnings after the bell. First quarter earnings per share revenue just topped estimates for Twitter, but the company's shares sinking after that lackluster sales and user outlooks. We're going to have much more in just a few minutes when Kurt Wagner, technology reporter who covers Twitter, is going to join us. In the meantime, let's get the latest from Charlie Pellet when it comes to how the trading day ended and those earnings. Hey, Charlie.
Indeed, we're keeping a focus right now on Amazon.com. The big after-hours story, Amazon up now by roughly 3.5%, did report a big increase in sales, delivered a bullish forecast, continuing a streak of rapid growth, even as vaccine rollouts raise the prospect of a return to pre-pandemic shopping habits in the United States. Also after hours, Twitter delivered a revenue forecast for the current quarter, but may fall short of analyst estimates. Twitter shares tumbling after hours, down now by almost 9%. It was an up day on Wall Street with the Dow, the S&P, NASDAQ all advancing today. In fact, a record for the S&P, up 0.7%, ending the Thursday session at 4,211, up today by 28 points, bringing its year-to-date gain to 12.1%. The Dow up 239, up 0.7%. NASDAQ up 31, up 0.2%. 10-year yield 1.63%. Gold down $8 the ounce, down 0.5%, 17.72. And West Texas Intermediate crude up 1.7%, 64.93 a barrel. Stocks rose to a record as investors digested the latest batch of corporate earnings and data that showed the American economy gained steam in the first 3 months of the year. Now, as for the market backdrop, Brad McMillan is with Commonwealth.
When you look at what's going on, the economy is doing very well and looking to accelerate. We're getting to normal. The Fed is very explicitly saying we're all in. We're going to keep pushing behind us. And companies keep making more money than anybody would ever have thought. So there's not a lot to get upset about, and I think markets are just reflecting that.
And again, he was interviewed right here on Bloomberg Business Week. So again, recapping here, equities push higher, S&P at a record, S&P up 28, up 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It certainly is. Thank you, Charlie Pellet. Well, we are making our way through Twitter earnings. The company reported earnings per share and revenue just topping estimates, but shares are sinking after lackluster sales and user outlooks. Joining us now with more is Kurt Wagner, technology reporter who covers Twitter for Bloomberg News. Joining us on the phone from San Francisco. Kurt, it sort of seems like there is a kind of like tale of two social media and advertising supported companies here, right? There are the Facebooks and Alphabets, right? And then there are the Twitters and Pinterests. What's going on with Twitter?
Well, I think the biggest issue here is that Twitter has always been what's called a brand advertiser. You know, they get the big brands you're familiar with, the same people who are spending money on television, who like to be involved with, you know, big events like the Oscars or the Olympics. But they're not very strong when it comes to what has become the bulk of online advertising, which is this direct response advertiser, right? The small retailer who's trying to target you very specifically to get you to, you know, buy something. And so what we've seen over the last year is that direct response has really blown up. We've seen Google and Facebook really capitalize as all these businesses have gone online. And Twitter, meanwhile, is still kind of doing the same old brand stuff that it's been doing historically. And I just don't think that it's really reaping the same benefits that some of those bigger companies are.
Well, shares down more than 9.6% in the after hours. Is this all about guidance?
I think guidance is a big part of it. You know, we saw that the numbers came in almost exactly where everyone expected they would. But for next quarter, they've said that they gave a revenue range, and the estimates are on the high end of that range. In other words, that means Twitter has to basically hit the very high end of what it's giving people in order to meet the expectations. So I do think there's a little bit of disappointment there in that, you know, while we saw, again, Facebook and Google really come out and say, hey, not only was Q1 strong, but we're expecting a good Q2 as well, there's a really good chance that Twitter might underdeliver here.
Kurt, I want to go back to what you said about direct response. It got me thinking about what I see in my own Twitter timeline when it comes to ads. And look, full disclosure here, I spend way too much time on Twitter, more time on Twitter than pretty much any other app. But one thing I noticed this week is, like, even until yesterday, I was still getting ads on the mobile app for the Oscars, something that ended on Sunday. And I'm thinking to myself, even before these earnings, I'm thinking to myself, how is Twitter to the point in 2021 not smart enough? And I mean, when I say Twitter, I mean the app. Like, how is the app not smart enough to show me something that's more relevant?
Well, it's really funny that you say that, because I had that experience a few weeks ago. I started seeing ads promoting a baseball game that was over and had been over for a couple days. And I was, similarly disappointed, right? Like, who is paying to promote a live event to me that is no longer live? And not only not live now, but has happened days ago. And I don't have a good answer for why that's the case, other than that, advertisers should be maybe paying closer attention to the timelines of their campaigns. But you would think Twitter as well would not want to show that kind of an ad, right? It's not very relevant. It's not helpful, certainly, to you or me. And so I think that that's, an example of the kind of thing that they could certainly do a better job of.
What about when it comes to Twitter's product, Kurt? Because you and I have talked a lot about this over the last few months, that Twitter Investor Day and the way that the company really changed the way that investors were thinking up until then, at least year to date, about the company's ambitions and the company's ideas for the product. The Twitter's a unique product in that it hasn't changed significantly, apart from the number of characters that you can really type out on a tweet, since the company was started more than a decade ago. What did we learn in the earnings about the company's thoughts on product?
Well, that could also be, I would think, construed as a disappointing thing about this earnings report, is that there's really not much new in here at all. We talked about subscriptions as being something that Twitter's looking into. There's no updates on subscriptions in their shareholder letter. Obviously, Twitter Spaces, their audio chat room.
This is the Clubhouse-like competitor, right?
Right now. Yeah, it's a Clubhouse competitor. It's I think it's actually better positioned just because there's so many people on Twitter who already have a following that, for someone like me, it works better than Clubhouse because I don't have to start from scratch. But again, no update in the shareholder letter about Spaces either. And so I just think, like, the kinds of things that might get someone excited about the future of Twitter were not really mentioned in this letter. And then you couple that with the fact that, they're kind of announcing some lackluster projections for next quarter. I think that may be a combination of what we're seeing here.
Kurt, in 15 seconds, what are you going to be listening for on the earnings call?
I am going to be listening for some of those product updates. I want to know, how Spaces is going. Are they getting interested in more M&A? And then, are they getting ready for a newsletter subscription business? These are all new lines of revenue that they could have. And I think that would be interesting given their situation with ads right now.
Kurt, I know you are swamped. Thank you so much for taking the time, stepping away from crunching those numbers. I really appreciate it. Thanks for joining us. Kurt Wagner, technology reporter at Bloomberg News, joining us on the phone from San Francisco. Twitter shares down more than 9% in after hours. Stock-based compensation boosted for the year. Mostly Trump-free first quarter saw 20% user growth. Let's check in with Nancy Lyons for a check of the headlines, world and national, in D.C. Hey, Nance.
Hey, Tim. U.S. health regulators are pledging again to try to ban menthol cigarettes. This time, the FDA is under pressure from African-American groups to remove the mint flavor. The FDA's Mitch Zeller says menthol cigarettes are particularly popular among black smokers.
85% of all black smokers use menthol cigarettes, compared to just 30% of white smokers. And while we've seen declines in menthol cigarette use among non-Hispanic white youth, we have not seen the same declines in youth from communities of color.
Zeller says lowering nicotine content in cigarettes still up for debate. Today's announcement is the result of a lawsuit filed by anti-smoking and medical groups last summer to force the FDA to finally make a decision on menthol. Well, as more and more Americans become vaccinated against the coronavirus, the next big question is, will we need a booster? Moderna's CEO Stefan Bancel tells Bloomberg they are testing 3 options for boosting.
We're testing the current vaccine as a boost because we think it will help your immune system by boosting all your antibodies. But also we're testing one that is specific for the strain first identified in South Africa, 351, and also a 50-50 mix of a existing vaccine and the new South Africa vaccine into a single dose.
Bancel says the company is also boosting supplies of the vaccine, promising 3 billion doses next year. The NFL draft begins tonight. Selection ranking matters. Sportrack says the player chosen first will get a $37 million contract. The player chosen last in the first round, about a third of that. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
Thank you, Nancy Lyons. Tim Stedevec in the Bloomberg Interactive Brokers studio. You're listening to Bloomberg Business Week. I'm joined now by Charlie Pellet. Hey, Charlie, how does a COVID-free island sound to you?
That sounds absolutely heavenly. I've seen pictures. I've seen videos of this island on YouTube. It looks spectacular. Imagine some of the clearest water you have ever seen. We're talking about the island of Ischia, which is about 1 hour away from Naples by ferry. It is an Italian island, and essentially that is one of its selling points. We are COVID-free, and this is the big question. Can people visit? Once you do get there, what sort of restrictions will you face? But overall, could be a big winner.
It could be, because the economy depends on those visitors. The residents of the island, there are 70,000 of them, are eagerly awaiting a boatload of vaccinations. Once everyone has had the shot, they can declare the island a COVID-free zone, helping to ensure an influx of wealthy visitors from across Northern Europe and the U.S. Islands that can seal themselves off, Charlie, we've talked about this from the spread of COVID-19. They are set to mop up some of the biggest gains from European tourism this summer, in yet another example of how the pandemic has shapen up the global economy, carved out new winners and losers. Greece is seeing something similar because it's well ahead of the game. It's already inoculated most residents on the smallest of its hundreds of islands.
Indeed, though, it has to be a very delicate dance, though, for tourism officials and indeed health officials on these islands, Greece specifically, but also to the island that we're talking about off of the coast of Italy, because if you get one person who comes into town and starts to spread among other tourists and word gets out, or perhaps for whatever reasons, if it continues to spread among some of the local people on the islands, that could create quite the backlash.
Charlie, you've traveled a little bit since getting vaccinated. Would you be comfortable traveling internationally?
At this point, believe it or not, no. I've got a train trip coming up in just about a week or so, going across the Rockies, but that's it for the time being.
Well, I look forward to hearing all about that. This is, I'm dreaming of the summer, Charlie. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Amazon's reporting a big increase in sales. It delivered a bullish forecast, continuing a streak of rapid growth, even as vaccine rollouts raise the prospects of a return to pre-pandemic shopping habits in the U.S. No details from Amazon on the Bezos transition timing. Amazon shares after hours up now by about 4%. Twitter tumbling after hours. Twitter delivered a revenue forecast for the current quarter that may fall short of analyst estimates. Twitter shares now down by roughly 8.8%. A record on the S&P today, a move higher for both the Dow and NASDAQ. Volatile trading today. We had the S&P up 28 to 4,211, up 0.7%. The Dow up 239, also up 0.7. NASDAQ up 31, a gain of 0.3%. 10-year yield 1.63%. Gold down $9 the ounce, lower today by 0.5%. 17.71 the ounce. West Texas Intermediate crude up 1.6%. Right now, West Texas Intermediate crude 64.86 a barrel. Recapping, Twitter plunging after hours, down 8.8%. Amazon higher, up by about 4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. Well, there has been so much talk of ESG and the different way that investors are thinking about a return on that investment and what exactly it means when companies make changes that don't necessarily just benefit the shareholder. And when I say shareholder, I mean that person who is actually holding the company's stock. There are many types of shareholders, as companies have started talking about in recent years. Rick Alexander is founding partner and chief executive officer of the Shareholder Commons. It's a nonprofit that teams up with activist investors to propose that companies convert to a public benefit corporation. Rick joins us on the phone from Wilmington, Delaware. Rick, thanks for joining us. Can you explain what exactly a PBC, Public Benefit Corporation, is?
Sure. Thanks for having me. So a PBC is just a slightly different, a slightly altered legal form. It's a corporation. All the rules are exactly the same. The stockholders elect the directors, and the directors hire managers to run the company, and everything works just like a standard corporation, except that for a conventional corporation, the courts have interpreted fiduciary duties to require the board to sort of do everything in its power to create long-term value for shareholders. Now, that often means, treating stakeholders like employees and customers and communities well, because you can't run a business without treating those constituencies well. But the bottom line is always about creating value for shareholders. In a benefit corporation or a PBC, the idea is that directors and the managers who work for them can consider the interests of those stakeholders on their own, and sometimes even prioritize those interests over the interests of delivering financial return to shareholders.
Rick, is this different than a B Corp?
So a B, they're related, and the names are unfortunately confusing. A B Corp is a certification provided by a nonprofit, but it's a private certification that a company can get that it has good environmental and social impact. But B Lab, the company that provides that certification, also, when they were creating the certification more than a decade ago, came up against this problem that when they were certifying companies, they were certifying conventional corporations that had sort of a, you were swimming upstream trying to do good when you had this ultimate shareholder value mandate. So they encouraged legislatures around the country and now around the world to create a new corporate form that would allow companies that they certified to sort of hold that, to sort of have mission lock. And so they came up with this idea of the benefit corporation, but that legal form has now sort of taken on a life of its own beyond B Lab.
So how successful have you been at Shareholder Commons in getting activist investors to propose companies convert to PBCs?
Well, getting activist investors to propose PBC, that's the easy part. So I think we have, about 15 resolutions going to a vote this season, we were worried that we'd have a problem with the SEC because, as the listeners know, often companies try to knock these proposals out. But in fact, the SEC said it was a valid proposal. And so we're going to go to a vote at about 15 companies this year.
And is there, in your opinion, any chance that they get adopted?
No, in this first year, we're not going to get high votes. What we're really doing is teaching shareholders. I mean, for example, I was at the Wells Fargo meeting earlier this week, and we made that proposal, and the preliminary report was that about 3% of the shareholders had voted in favor. And so that's a fairly low vote, although if you think about it, 3% of those shares represents about $10 billion in invested capital. So we think that's okay. And the other thing to be aware of is that there is a parallel movement by management to make these transitions. So there have been 4 or 5 IPOs this year of public benefit corporations. There have been 2 companies that on their own just decided to go to their shareholders and ask to become a benefit corporation. That's Amalgamated Bank and Viva Systems. And actually just this morning, United Therapeutics, a bioscience company, announced that it too was going to ask its shareholders for a vote.
So where do you
those
think?
2 things are
I'm wondering where you think we are in this moment of time, because a few years ago we did hear from the Business Roundtable, an influential organization made up of executives from around the country, and they talked about the difference in stakeholders and who are the stakeholders, not just shareholders, but employees, the community that the business operates in. And then we also have companies that just love to talk about the idea of ESG, but I still think there's this disconnect between the way that investors feel about it. Because it does seem like when we're talking about company earnings, we're talking about the top line and we're talking about the bottom line.
You're exactly right, and we're trying to make that connection. So every company except for one that we've targeted this year with these resolutions signed the Business Roundtable statement of the purpose of a corporation, which says basically that we care about stakeholders too. But when you look closely at that statement, and also when you look at the conduct and the corporate governance guidelines of these individual companies, it's clear that they care about stakeholders, but only in the sense that they can, quote unquote, do well by doing good. And that at the end of the day, their focus is on shareholders. And we think, some of that's driven by shareholders, but what we're trying to do is to make it clear, and this is really our overall mission at the Shareholder Commons. PBC is just a tool. Our overall mission is to make investors, asset owners like pension funds and asset managers like BlackRock and Vanguard and State Street understand that when a company like Chevron continues to drill new wells and sort of lower the price of carbon so that the climate crisis continues to build up, even though that company, even though Chevron may increase, not short-term, but its long-term value to shareholders, that's a bad trade for most shareholders because most shareholders are diversified and they own the entire market. And the effect of climate change over time is going to be to damage the economy and reduce GDP. And for a diversified portfolio, there is a direct linear relationship between GDP and return. So that's why we're called the Shareholder Commons, because we believe that shareholders have a common interest, and their activism should be focused first on maintaining these systems.
Well, Rick, it's fascinating stuff. Rick Alexander is the founding partner and chief executive officer of the Shareholder Commons. It's a nonprofit that teams up with activist investors to propose companies convert to a public benefit corporation. Rick, thanks so much for taking the time. This is Bloomberg.